Good afternoon and good morning to those of you dialing in from the West Coast. My name is Alyssa Riddell. I'm head of marketing at Coconut Software, and thank you for joining me today as we review the importance of humanizing financial engagements with your prospects and your customers, and talk a little bit more about why personalized experiences really do work. There are a few resources that we've provided that you can download and peruse at your leisure. The first is a white paper that we just launched that delves really deeply into this topic. It has additional stats and information as well as some real life examples from Coconut customers. And then we also have provided a link to our website where, again, there's even more information that you can have a look at, tools and resources that might prove to be useful to you. You'll also receive a link to this webinar recording afterwards, should you want to share with any of your colleagues, because as we all know, as we're working from home, everyone loves joining a thrilling webinar. So as mentioned, I run marketing at Coconut Software, a beautifully designed and powerful to use solution that helps financial institutions specifically who want to improve their customers' digital and physical engagement, a key topic of today's conversation. Our suite of cloud-based solutions provides a way to seamlessly schedule, measure, and manage client, prospect, and staff interactions. If you haven't picked up on the extremely thick Canadian accent already, I do work out of Coconut's Toronto office, and we support clients across North America. So let's dive in. So why humanize banking? And it really comes down to the fact that much of our world treats individuals like numbers, with minimal concern for the person behind the digits. All consumers, and not just in the financial space, want to spend their limited time on the people, experiences, and things that we find to be valuable. And financial institutions really need to demonstrate their value for their customers by personalizing engagements and interactions in order to build those deeper connections. And no matter how quickly we're being forced into digitally transforming our operations, especially as kickstarted with the COVID-19 pandemic, the pressure of using apps, CRMs, chatbots, we really have to remember that we cannot replace that really important human-to-human connection, especially for important life moments. And we really like this quote here on the screen that actually comes from a Forrester study that was released in September of 2020. And at the end of the day, what they've discovered and what we completely agree with is the fact that as customers are becoming more digital savvy and comfortable with using digital channels, the financial institutions, banks, credit unions, wealth management firms really need to make sure that they're ensuring their customers feel valued. And how do they do that? They do that by appreciating and respecting the time that the customers are spending with those financial institutions. And so at the back of our mind, we always have to keep clear, how do we actually reduce the time that it takes to do business with us? How do we do that? By streamlining task flows, by making operations more efficient, and by minimizing steps. And that's really how customers begin to feel that their financial institution respects and values their time. And so I think anecdotally, many of us have felt that a better customer experience results in stickier or more loyal customers. That leads to higher advocacy, that positive word of mouth that everyone is always looking for, and ultimately more revenue. The good news is that the research is actually proving this out. So from that same Forrester study that I mentioned, they found some key data points that I'd like to share with you today. So among financial institution customers in the US that feel valued, 71% plan to stay with that financial institution, 82% plan to spend more, and 87% will advocate to others. Incredible numbers that no matter how good your marketing team or your marketing campaigns are, really underscore the importance of treating your customers right and giving them the best possible experience. And for those that actually felt satisfied across all channels, and what we mean by that is when they engage with their FIs, their financial institutions on a website, a call center, in-app, in person, etc., those folks tended to have a 7% increase in deposit share. So these are some real statistics to back up that gut feeling that we always kind of knew, that how you treat your customers and prospects actually directly translates into profits in your bottom line. So you've managed so far, but customer expectations are evolving. Why do we need to change now? And I think it really comes down to the fact that your banking customers want to complete their transactions and get advice in a way that is convenient for them. Gone are the days where everyone rushed to the bank during the weekdays, sometime between 9 and 5. And instead, the pendulum is now swinging more towards a digital-only experience with online banks. But what we've actually found in our research is that your customers and your prospects want to be met somewhere in the middle. Encouraged to use digital options when low-value transactions can be completed, but welcomed into their local branches when advisory and life milestone discussions need to happen. Because after all, when you think about it, money really represents their dreams, their kids' future, and is a reflection of all of their hard work. But what a recent PwC study found was that 59% of consumers feel that companies have actually lost touch with the human element of customer experience. So when we say that the appointment economy is driving this digital start to engagement, what we really mean is that your customers and prospects will generally default to digital first. So in the past, folks may have dropped by a branch to complete their task, whether it was transactional, like depositing a check, or if they wanted to chat with a financial advisor. But banking customers now actually see the convenience of access to a multiple of different channels, especially since COVID-19 pandemic started and many of their local branches have either shut down or significantly reduced the hours. Many folks that normally wouldn't have been interested in digital channels were suddenly forced into having to use them for the first time. And frankly, they found out that it was quite convenient to their lives. And so what we say in that first sort of circle is that digital with bricks and mortar is something that we're seeing more and more regularly. It's not an if, it's an and. The biggest trigger to creating this appointment economy is really the fact that we're now scheduling our lives into a series of slots or appointments in order to meet those social distancing guidelines and really to maintain our feeling of safety and comfort. I don't know about you, but I've been finding myself creating appointments for services that frankly I never would have considered booking an appointment for before. So things like going to pick up groceries at a certain time slot, getting curbside pickup for a new printer, dialing into virtual doctor's appointments, to even renegotiating my mortgage via a conference call. And as customers, we've now been facing this for really almost a year. And these behavioral changes that we were completing now as kind of we have to get through this, are now solidifying actually into new habits and new preferences for the future. And so lastly, those customer expectations have really become, I want to bank how I want to bank. And your prospects and customers are bristling when they're being forced to do things that aren't convenient to them or aren't their first choice. And if they aren't getting what they need, these customers, frankly, are willing to take their money and move to other institutions. And now we're seeing evidence that customers actually prefer to kickstart their search for an answer to a question by calling in, by visiting a website, by opening up a mobile app, or responding to an email directly from one of your staff. So in 2020, we commissioned a financial institution consumer study about banking habits. And what we found was that over half of consumers surveyed, so 54%, take less than 10 minutes to complete their banking activities each week. So the question now becomes, how do we actually make it as convenient as possible for these customers to complete those activities as quickly as possible and with a cost containment frame of mind? So how can we actually service these in and out consumers as inexpensively as possible? The answer is, of course, digital. So the chart that I'm sharing here on the screen was created from that same commissioned Future Branches report that I mentioned. And it showcases that the majority, 51%, of individuals prefer a digital experience through a mobile app, followed by an in-branch experience at 29%, and finally a desktop digital experience at about 20%. But the really interesting part that we've called out along the bottom there is that 71% of those same respondents believe it's really important to build a relationship with bank personnel. And what you're probably realizing with this combo of stats is that for those transactional day-to-day type activities, your customers by and large like the digital option. But when it comes to larger, more complex transactions like buying a house, ideally investing their lottery winnings, your customers actually want to leverage the expertise, the relationships, and the advisory services of your staff in branch. So when we get down to humanizing the engagement experience, I really like this quote. And we have to remember as financial institutions and the vendors that support them, we're oftentimes a means to an end for your consumers and for your prospects. No one sets out to get a mortgage. They need a mortgage in order to get a home. And I think remembering this in everything that we do is going to keep us grounded in the fact that we're dealing with humans who need our help to do very human things. So in our research, we found 3 key considerations that I want to share and walk through with you today. The first is that you can't measure what you can't manage. The second, consumers want to be helped in a way that's comfortable and convenient to them. And third, different activities actually require different levels of support. So you can't manage what you can't measure. We have regular conversations with banking executives, and it's surprising to us how often they're not tracking, frankly, really basic metrics to measure the engagements between their customers, their prospects, and their staff. So things such as, what is your meeting no-show rate? How many walk-ins do you get at a particular location, at a particular hour, a particular day of the week? And what services are the most popular? And when you start to track those metrics and understand the data behind them, it means that your team actually understands when and where your most valuable engagements are happening. And so we asked in another commission study with future branches, a bunch of banking leaders, a series of questions about sort of the future, what they think about their banks, how they're adjusting, especially in the wake of COVID-19. And what we found was that 28% of banking executive respondents say that improving in-branch personnel's access to insights about individual consumers is important. And so immediately my mind is going to, okay, but what are those other 72% of banks doing? Are they not providing their staff with that information? Because if that's the case, that's a huge gap in that staff member's knowledge as to who this customer is, what is their history with that bank or credit union or wealth management firm, and how might that customer actually want to be serviced in the future? So the question to ask yourself and your leadership team, are we measuring our customer and staff engagements and the outcomes of those discussions in order to manage our omni-channel strategy and branch network more effectively? All right, topic number 2. Customers want to be helped in a way that's comfortable for them. So our CEO, Catherine, started Coconut Software about a decade ago, and she was traveling extensively for work. She had to book her own flights and hotel accommodations. And so when she was back home, she decided she really wanted to deal with all the knots in her back. She wanted to go get a massage. And she quickly realized that it was far, far easier to coordinate and manage transcontinental business travel than it was to book an appointment with the masseuse down the road. And so this friction was actually costing that spa both revenue and customer experience. And so since then, Coconut has changed. We are now focusing on helping specifically financial institutions assist their customers, but the story is the same. We want to help them in the way that they want to be helped. And when you think about it, some of your customers and prospects will actually want to do everything on an app, and that's totally fine. And others will want to visit the branch, and again, that's totally fine. But it's important for your organization to determine how each of those individuals wants to bank and then serve up your solutions in their channel of comfort. So again, in that same survey that we asked those banking leaders, 25% of banking execs are focusing on personalization of their engagements, meaning they're asking their customers, how do you want to be helped? But again, I go back to the 75% that isn't doing that. So are they just assuming that they know how their customers want to be serviced and helped? Or even worse, do they actually not even care enough to diversify the way that they're supporting those customers and those channels in the first place? So the second question to ask yourself and your leadership team, how are you asking and anticipating the way in which your customers and prospects are wanting to engage with you? Okay, and then the last topic, different activities need different support. So physical branches and the personal interactions that they facilitate are still very important for large and complex banking transactions, such as taking out a loan. On the other hand, many consumers are now doing smaller transactions like checking their balance, making deposits, using ATMs and banking apps totally digitally on their own self-service. It's imperative for financial institutions like yours to know when to automate and when to humanize the interaction. Make sure that you match the level of support that you provide to the level of complexity for that particular request. Don't make opening a checking account more difficult than it needs to be. And if you see if you can actually support that activity through something that's less expensive for a channel, say for example, like a chatbot on your website. That way you can really focus your highly trained and highly paid in-person staff to that truly advisory value-added level of support. And of course, this also helps with your bottom line. So having someone book an appointment to deposit a single check into a checking account is a very high cost support channel for a low value transaction that easily could have been automated through taking a picture on a mobile device through an app. However, for high value consultative type services like wealth management, that signify a significant transfer of funds or a key life milestone, an in-person or virtual face-to-face appointment probably makes the most sense. And so the graphic on the screen really shows that human and digital interaction spectrum. So your customers are going to want to move between both extremes, bricks and mortar versus digital only. And as financial institution leaders, you also want to encourage certain behaviors to happen in person versus digital based on that cost. So the core foundation of humanizing banking is giving your customers and prospects the options to engage with your staff when and how they want. And based on their personal schedules, it could be pre-booked appointments or it could be on demand like walk-ins. And then the method of the engagement. So in person versus a phone call versus interacting on a mobile app. But note that it's imperative that you ask people, how do they want to be helped versus just going ahead and assuming. In a recent Gallup study, they actually found that migrating customers from channels that they prefer to use to channels that they don't may lower their engagement with that bank. And some banking executives may be, less concerned with this drop of engagement among customers that perhaps are less profitable to the bank. But they should be seriously concerned that moving, especially those valuable customer segments, moving those folks from channel where they prefer to bank and prefer to transact to other channels will actually result in a decline of engagement. And it could definitely lead to a loss of revenue, profitability, and customer retention. So the third question to ask yourself, do you make it easy for your customers to select the channel that is most comfortable while balancing that high-low value with the high-low cost methods? All right, so at the end of the day, why does humanizing banking work? And it works because it makes your customers feel appreciated, respected, and valued. All necessary ingredients for loyalty and an increase in share of wallet. So I go back to another Forrester study that was released recently, And they found that the revenue impact of a single point improvement in the CX, Customer Experience Index score, so essentially a measure of how successfully a customer delivers customer experiences in a way that creates and sustains loyalty, actually results in an $8.19 per customer of annual incremental revenue for multi-channel banks. So with direct and measurable results on the feeling of engagement leading to loyalty and share of wallet, any financial institution looking to gain and retain customers in a swiftly changing environment must evaluate whether they have the technology stack and the internal resources to support the humanizing of their customer engagement experience. And personalizing the experience through asking, then servicing those individuals in their channel of comfort means that they feel valued and that their time is being respected. And so I would encourage everyone to head over to coconutsoftware.com/humanizing banking for more research, thought leadership, tools, and assets that I'm sure you'll find valuable as you guide your organization down the path of humanizing your engagements. We'll also post a link to this recording on that site as well, in case you'd like to share. Thank you for joining me today, and let's all work together to humanize banking in 2021 and beyond. Thank you.